Alright everyone, welcome back to the channel for another update on KDA. In yesterday's episode, Kadena, huge dump, we talked about everything to expect in the lower time frame from the technicals, patterns, oscillators, moving averages, and my price targets. While the lower time frames are still playing out and I'm still expecting the price targets mentioned in that video, I thought we'd clear up a chart, reset everything, and head over to a fresh perspective in the eyes of the Heikin-Ashi candles. Now, you might be wondering, if you're new to the channel, first of all, warm welcome. If you are new and you haven't seen Heikin-Ashi candles before, you might be wondering how are they calculated, why do traders use them, and why are they beneficial to me? Now, I don't have enough time to explain everything about the Heikin-Ashi candles in this video. I will explain why I use them, but if you're looking for a more in-depth dive into the Heikin-Ashi candles, be sure to head over to my channel, click on playlist, educational series, and scroll about 10 videos down. I've made a video, how to Heikin-Ashi candlesticks, a 5-minute video. If it's not in there, you don't need to know it. So let's dive into the Heikin-Ashi candlesticks, starting off with why traders and myself use them. Now, let's head over to the Japanese candlesticks so you can see why. Now, when you look at the Japanese candlesticks, it's very, very simple. You know, the candles open at the candle body close of the previous candle. So you most of the time see trends are sometimes hard to characterize because when you're in an uptrend, you get multiple red candles, before we actually top out. And it's the same to the downside. As you can see in this downtrend, we've been having multiple times where there's been a plethora of green candles that have shown themselves while we've still been heading to the downside. Now, when you go over to the Heikin-Ashi candles, this smoothens out the trend, and this is because Heikin-Ashi candlesticks open approximately halfway through the previous candle body close. So what this means is it takes more momentum in an uptrend to bring the price into the red section. So as you can see over here, it took, we were only red for about 1 week, and it was a doji that looked like we didn't head down for too long. But then we head over to the Japanese, and you can see for multiple weeks, this was calling this to be a downtrend, even though we continued to move up. And then as you can see, if you look at this run in the bull run for KDA, there would have been a few times where you might have been spooked out. But if you were looking at things in the Heikin-Ashis, you would have got a great entry point and a great exit point. So this is what I want to focus on today. Let's dive into this. I'm going to start off on the higher time frames. We haven't looked at the 6-month time frame before. The higher time frames won't have too much to comment on. On the 6-month Heikin-Ashi candles, you can clearly see right now it looks like we're setting up for a bearish engulfing candle. If KDA does come down to about 134, you can definitely see this is going to be curtains. Now, in terms of Japanese candlesticks, they didn't actually have too much of an engulfing pattern, but nonetheless on the logs you can definitely see that this is engulfing. Now, like I said, not too much to comment on this one. 3-month time frame as well, you can also see beautiful continuation ever since we topped out. If you were trading this based on the Heikin-Ashis, what you can actually see is we opened in the red at $5.90. So if you were trading on the 3-month Heikin-Ashi candles for KDA, you would have got into this massive uptrend round about this level, 38 cent, and you would have got out round about 6.90. And I'm sure when we bottom, it's going to give you a great opportunity to enter at a fair price on the Heikin-Ashis as well. Let's head over to the 1-month time frame. Once again, this is another reason why I absolutely love these. On the 1 month, it's so black and white. When you are in an uptrend, if you do have at least one green candle or at least one red candle, you're going to continue with the trend for a little bit longer. And as you can see, once again, if you got out of this market when the 1-month Heikin-Ashi candle started flipping bearish, you would have sold at around about $10.32. And since then, we've just been on a rampage to the downside, down 85%. So even when you smoothen out the trend, even when you're not buying exact bottoms and you're not buying exact tops, you're looking at things from a purely mathematical perspective, you're leaving your emotions at the door, and you're looking at this and saying, hey, when this chart goes red, it's probably time that the downtrend is running out of strength and it's probably time to sell. And on that same accord, when KDA does start to finally flip back into its first green Heikin-Ashi candle, you can best believe that I'm going to be lining up to buy a boatload of KDA. Now, let's head down to the lower price targets. On the weekly time frame, you can see quite recently we did have a rally, and this was telling you to sell at around about $2, which was a great idea because we are now down at $1.60. Now, if you're trading this, I personally don't recommend longing or buying altcoins, even for short-term trades in a bear market. But if you do insist, if this is something that you do want to do yourself, you can actually see that there has been a few times where you would have actually gotten out of the clear. If you did buy a couple of these uptrends, you would have had to look at something like the daily Heikin-Ashi candles to see when they actually started topping out right at the peak. But using the weekly to get in on these trends and then using the daily to get out might be a great way to scalp this. I'm personally not interested in scalping this. I'm much more interested in accurately calling the bottom, buying this, holding it for a year or so, watching this have a parabolic run to the upside, selling it for profits. You know me, if you've been watching me for a while, I say this all the time. I do not hodl altcoins. It is a terrible idea. I don't recommend holding altcoins for more than one cycle. I've made numerous videos talking about the Bitcoin is king theory, talking about when you look at the 2018 snapshot for the altcoins in the top 25, how basically none of them are in existence anymore. It's not a good idea to hold alts. I'll make more videos about this in the future. Is it a bad idea to buy alts at their bear market lows, hold it for a year, and then sell it against Bitcoin? No, that's a great idea. That's what I'm going to be doing. Am I going to be hodling through the bear market? No, I haven't been. Am I going to be buying the bear market lows when the Heikin-Ashis switch bullish? Yes, I will. Will I be DCAing on the way down? No. I've been letting you know this. I navigate these markets a little bit different than other people, and I think not listening to retail traders, because, you know, bear in mind, you know, if you've been watching my videos, if you are a seasoned veteran and you have been watching me since I covered KDA at 650, you would have looked in the comment section and seen every single week someone telling me my TA is going to be wrong and I'm never going to be able to buy cheap KDA because it's going to explode and I'm going to miss the boat. People told me I'm going to miss the boat since 650. They told me it like a month ago at $3. They told me it like when it was at 260, when it blasted up to 260 a couple of weeks ago. And, you know, I even get comments to this day saying I'm going to miss the bottom, blah, blah, blah. DCA is the only way to navigate KDA, blah, blah, blah. It's absolute nonsense. I've talked about this before. I have DCA'd in the 2018 bear market. It was a horrible idea. I did it because that's what retail did. Everyone was saying, every crypto influencer was saying DCA on every dip throughout the bear market. But then what happens is you find you actually get to the bear market lows and you've bought at like, you know, massively overbought levels, and then it's going to take absolutely ages to get to the break-even levels. This is not what I'm trying to do, and you might think this has gone off on a tangent, but this all ties back into the Heikin-Ashi candles and how these Heikin-Ashi candles will help you call the exact bottom. Be patient at this moment in time. Just looking at things like the EMA ribbons and setting yourself a target. Make yourself a trading plan. I've been talking about this trading plan since 650. Now, one of my trading plans was to buy the breakout of the daily EMA ribbons, if that ever happened. It never happened. You can see, since I started covering at 650, we only spent like a week or two above the EMA ribbons. We broke above them. Everyone was saying the bottom was in, and I was saying, wait for the retest. The retest will tell it all. We came down for the retest, failed the retest, and ever since then we've been rocketing to lower levels. I think it's quite clear KDA has a lot more to go to the downside before the bottom is in, but nonetheless, weekly time frame is bearish, monthly time frame, 3 monthly, 6 monthly time frame, even the daily is starting to trickle back into the red, which should be indicative that we're getting ready for that next leg to the downside. Now, I want to wrap up the video on one final note, because if you are new to the channel, you might be wondering, where is my bear market low prediction for KDA? Where do I want to buy KDA? And most importantly, where are we going after the bear market low is in? Well, I'll just briefly mention this because I've talked about this in many videos, but volume profile support, we've got 1.618 Fibonacci's down here, we've got psychological levels of $1 down here. It makes sense, in my opinion, for KDA to come all the way down to at least $1. I don't think it's going to bottom above $1. Could it bottom at 99 cents, 80 cents, 70 cents, 75 cents? Yes, that's my personal prediction. I think we're bottoming below $1. Could be right on $1, which is why I potentially might look to set up some buy orders at some point soon. But here's why I actually think we're going below $1. So if you look at this moment in time, we all know KDA has been extremely volatile. Now, I say extremely volatile. When you look at the past couple of months, you can see it's just been chopped up, down, up, down, up, down. But what I mean is, when we do get ready to break beneath the floorboards, as you can see by previous times we've broken through the floorboards, it can get very, very ugly in price discovery to the downside in the local terms very, very quickly. So For the total two, I think we've got about another 42 to 45% to go to the downside. As you can see, the stock RSI has not even started to break down yet. And at this moment in time, it's saying we're as overextended as we were back over here when the price was all up at 1.25 trillion, and as overextended as these two double top type regions that we saw for the altcoin market. So with that being said, I do see the altcoin market cap getting absolutely decimated in the next few months. Stock RSI has a lot of room to move down. So a 43% move down for altcoins, and Kadena only moving down about 37% doesn't make too much sense to me. So like I said, we've got more targets down here, 1.618 Fibonacci extensions at 85 cents. This could potentially be another level that I'm looking at in the short term, but nonetheless, I'm diving into the lower time frames now. It's not necessary. I talked about this in my previous video. So $1, my friends, is absolutely still in play. I hope looking at the Heikin-Ashi candles in the higher time frames really puts things into perspective for you. Also, I will say this is not the only technical that I'm going to be looking for to decisively call the bottom. However, I will say that the Heikin-Ashi candles is something that I associate a lot of weight with in my analysis. I think these are great. They're perfect for characterizing uptrends and downtrends. And because of the Heikin-Ashi candles, the Cowboy family has been sitting on the sidelines since about 650, recognizing the trend is still to the downside despite some of these local bounces that we may have day to day. So all I've got for you for this episode, my friends. Once again, be sure to head over to the educational series if you do want to learn more about Heikin-Ashis and a bunch more educational content. But yeah, as of right now, my friends, that's all I've got. Cowboy out. Peace.